The US bonds is going to crash again, and the stock market will most likely follow if we look at the pattern since 2008 all the way until now. And because of that, US gold is going to head towards 3496 level. This is Kel once again. Today, there's loads to share with you. And of course, Donald Trump, you can try to turn the chart around to lie to people, but the stock market is going to go down. So disclaimer apply as usual. Make sure you do your risk assessment. Now let's look at this 36666 prediction that I gave previously. Now, when the Dow Jones was coming down back then, I gave a number, 36,666. I said that the market has to hold this level. And in fact itself, I put it everywhere on my social media. And what happened, guys? Look at this. Because the fear and greed index was at 4, something we didn't see from 2000 during the COVID period. And I said it's a time to buy into the market. And truth be told, I expect you guys to follow too. And wow, look at it. The market really rebounded by almost 4,000 points just because of that. 36666. Oh my goodness. Now the thing is this, we have made good money from the market. Now the question is what will happen next? Because Trump, he temporarily hot dropped the tariff to 10% for most countries, and that caused the market to recover. But seemingly now things are not going to be nice for him. Let's take a look. The US largest bond holders are actually Japan and this China. And we all know that these two, especially China, is not going to be happy with whatever tariff that is ongoing now for them, right? So the thing is this, there are only rumors going on say that Japan could be selling the US bonds because they want a stronger yen. So if that's going to happen, if China also sell, then a big issue coming up for the America. So the battered bond market has started since 2025, face some real difficulty at the moment right now. And do note there's almost $3 trillion US debt is going to be hitting maturity in 2025. Now you must understand this debt was created back in during the COVID period where many people basically loan money to US at low interest rate. And the thing is right now the interest rate is at high level, and if it mature, then US will need to pay a lot of money for just interest alone. And in fact, itself, right, the date is between late June or early July. And that means that we could face a serious problem if US doesn't solve this problem ASAP, because the interest rate back then was at low level and now it's at a higher level, right? So the thing is this, you can see over here, the Donald Trump has been attacking Jerome Powell. He wants the Jerome Powell to lower down the interest rate, but seemingly Jerome Powell is not going to do that. Yeah, it's very clear that Jerome Powell is not keen to do that at all. He don't see the reason for doing that. And of course, you must understand the Federal Reserve is considered an independent part of the U.S. government and not a separate entity. Hence, therefore, this is very clear with the U.S. Federal Reserve. When they print the money, the one that pay is the taxpayer of America, and that's the reason why they don't see the reason to bring it down. They can print more money to save the U.S., to save them out of this maturity issue, but then they can still stay at 4.38% to make the money from the U.S. and the people itself. So because of that, right, Trump says that he wants to see whether is there a reason or methods to remove Jerome Powell away from the chair. But of course, we all know that it's not really possible because a lot of presidents tried to do that previously and none of them can do that. So the thing is right now, Yellen is definitely very concerned, and she's right. Apparently, this is the first time I see her speaking the truth. Okay. So first of all, right, the tariff is going to erode the economic confidence. Yes, people are very worried. They don't care and they don't really feel trust. They don't have any more trust for US anymore. And main thing is this, there's a lot of misguided information. And she said this 6 days ago that we will be lucky to skirt a recession. So that is very strong words from Janet Yellen. And of course, she believed that this could trigger into a recession. And of course, we all know that the Atlanta Fed GDP, now real GDP, has already since early of the year has mentioned that could be a potential chance to see a recession coming in. And that's something that we all know that it will happen likely in the late part of this year. So remember Tudor Jones, the guy who say all roads lead to inflation. He was long Bitcoin and gold. The gold made lots of money for him. Bitcoin, not really. But the main thing is this, he says that the market is going to go into a potential broke situation, and he's not wrong at all. And based on what's happening right now in the US bond market, I think he'll be correct. And of course, we know that he is the one that made a lot of money during the 1987 Wall Street crash. So I believe that this will happen. So with this right now, there's a lot of people selling the US treasuries because they know that this is going to go down, and this is clear. So what will happen Now, we all know that the US dollar has been coming down quite a fair bit from 110 since when Donald Trump became the president of America, and now he went all the way to 98. So it's down by 120, 112 pips, right? So we all know that Donald Trump really wants the US dollar lower. He wants that, but he didn't do it on purpose. In fact, he do the tariff. He expect the dollar to recover, but instead the dollar keep on coming down, and that is whereby gold price has went up. So one thing to note, guys, the biggest winner in gold is actually America. Why? Because actually America has the highest gold reserve, 8,000 tons. All right, way above their China and India combined. So that's why for the gold to actually be at this level itself, I feel that most likely is the US. They are pumping it itself while bring the dollar down so that they can actually have some money to pay off their bills. But the thing is this, we look at what happened in since 2008, whereby we can see when the treasury, the bonds goes up in price itself, right? That's where the stock market actually came off. And this is the bond market going up and the stock market coming down. And you can see that again, when the bond price goes up, the stock market goes down. So the thing is this, you can see almost every time this happens, the bond price goes up and the market comes down. So the question that was happening now is that we are seeing is the bond price is actually coming down and the stock market is coming down at the same time. So something is going very wrong in this pattern here itself. And if that's going to continue, I think that we have a very big issue coming up. So guys, this is very clear that we need to be very careful on what is happening in the market, because normally we should see this thing is that the bond price coming down together, the bond price going the other way direction, but now we can see the stock market, the bond is coming down in price, but the stock market is also coming down at the same time. So this is something very unique. And if that's the case itself, there is a very high chance to see bond market coming down to the 82.90 area. And that should send the stock market much lower. So based on what I'm seeing right now, you can see that every time we have the S&P coming down to 5222. There's a very strong support around this area. But if the S&P breaks below 5222, we're going to see coming down to 5068. And in fact itself, we can even see a crazy number. We can see 4914 happening in the market. And that is going to be very scary. I think it is actually very possible for this to happen. So traders, you need to be on standby mode for this. So watch out for 5222 today. If the market closes below this, we're going to see some selling into the market. And of course, with that, let's just look at the gold calculation. So based on what I'm seeing right now, there is a very high chance for gold to trade towards 34.96, while the dollar will likely plunge all the way to 96.50 region in the next 2-3 months. So gold price to hit 34.96 is very possible. Of course, it wouldn't be a one-way traffic. There'll be some pullback, and again, it will go for that itself. And my target for this will still be July. All right, by July itself, we should see gold trading 34.96 area. All right, so you can put it into writing and hope that you make a lot of money from the market, because after that, if the stock market really go into a collapse situation, that we know why Warren Buffett have been building so much cash, because he will come in heavily, while then Jerome Powell will wait for his turn to come into the show. And then after that, the stock market will crash. And when it crash and he's done deal, that is where we can buy things very cheap and makes a lot of money. That what happened in 1987, 1999, and so forth. So guys, take note of these dates. Remember that itself. Be careful for June, July period. That's where things will go crazy. And then when August comes, let's go for the buy. All right, this is Kel signing off. Take care and have a great time. Bye-bye.